Why is Dangote buying back his shares? I mean, he owns them, right? Hello, folks. Welcome to my podcast, The Way I See It, which is just my podcast on money, the economy, personal finance, and the intersect between all these and what we can learn from it. This week, I want to talk about share buybacks. Why? Because the largest company in Nigeria, Dangote Cement PLC, is doing a share buyback. What is a share buyback? What would it mean for the investors? What would it mean for Dangote? Let's talk about it, yeah? So, first thing, what is a share buyback? It's just like the name implies. It's when a company buys back its shares from investors that hold those shares. So in this instance, Dangote has about 10.4 billion issued shares. Dangote wants to buy back about 10% of those issued shares. The law says they can buy back 15. He wants to buy back 10%. So first question, is this legal? Yes, it is legal. The Corporate and Allied Matters Act allows share buybacks. The Nigerian Securities and Exchange Commission also allows share buybacks. The Nigerian Stock Exchange also allows share buybacks. So this is perfectly legal. So the second question is, why is Dangote doing a share buyback? Very simple. When you buy back shares, you reduce the supply of shares in the market. So if Dangote reduces the supply of Dangote shares by 10%, what happens to the market? There's less supply. And economics says that whenever there's less supply, the price goes up. So you can see that this is going to make the price of Dangote Cement PLC go up because there are now less shares that are going to share in any declared dividends that the company might declare. So you can look at the share buyback as a way of a dividend back to the shareholders because it's going to increase the share price that is held by each individual shareholder. If you want to look at it this way, I mean, if you want to give an example, let's say a company had 5 cars and the company had a car maintenance budget of, say, 50,000 naira, which meant each car got 10,000 for maintenance, right? What would happen if the company said, okay, we're going to take cash from the bank and buy out one car. We're not going to maintain one car. We're just going to buy it out from the maintenance pool. What that would mean is that the maintenance pool will still have the 50, but now it's going to be 4 cars. So instead of them sharing 50, which is going to be 10,000 per car, each car then gets 12,500. So this can see an increase in the amount that each car will get. Same thing will happen with Dangote stocks, yeah? So, and again, the point is this, even if the profits remain the same, it would be an increase to the shareholders because there are now less equity or less investors are going to share in that same profit. So it's a big deal for the investors. They're going to have a windfall. So two things will happen. There will be less Dangote shares, yeah? And of course, Dangote's cash position will go down. It could be cash, it could be assets, but Dangote has got to convert something to buy back those shares from the investors. On a broad level, why do companies buy back shares? Well, there are many reasons, but I think I picked about 3. The last one is the fourth reason. I'll talk about that one. But let's talk about this first 3. The first one, the company thinks the share price is too cheap. It will buy it back. So are Dangote shares cheap? Well, how do we define cheap? I looked at the price earnings ratio. So the price earnings tells you at any given price of the stock, that is how much you are paying for earnings. So what's the PE of Dangote? I looked at it of Dangote Cement. It's about 16. I looked at the price earnings ratio of its competitor, that's WAPCO. It's about 17. What about the price earnings of the Nigerian stock market as a whole? That's about 14.66. I mean, so ballpark, Dangote can say yes, he's priced in with the market. I mean, if you buy one stock of Dangote, you're paying 16 times earnings, but the whole market is about 14.6 earnings. Yeah, he can make the argument that yes, yeah, maybe it's a bit pricey, but it's within the market band. So let's give him a pass on that, yeah? The companies also do, this is the second reason now, companies also do a buyback to increase or to improve their financial ratios. So remember what I said, when Dangote reduces the number of shares that are issued, it increases the earnings per share because each share now has a larger share of earnings. So we're going to see the earnings per share of Dangote go up. We're also going to see the PE of Dangote go up. Let's look at the compare Dangote's earnings per share to WAPCO again, which is also its main competitor. Dangote's earnings per share is about 14.94. And that easily beats WAPCO, which is about 1.28. So in this instance, Dangote already has very, very good financial ratios when compared to competition. So doing this will also always just make it look better, yeah? Another key reason why the company does a share buyback is because it thinks it's got sufficient reserves or cash, because it's going to convert that reserve or cash to then exchange for the shares that has already been issued. This is where Dangote then doesn't really do too well because Dangote has some debt on her books. Dangote's debt to equity is about 0.56. You compare that to WAPCO, which is about 0.15. Dangote's debt as a whole is about 271.33 billion. That's a lot of billions, right? So you would wonder why they just don't take, i.e. Dangote Cement doesn't just take all that cash and pay down its debt, improve the balance sheet. Why do a specific buyback per se? So 3 reasons. 1, the company thinks its share price is too cheap, it can buy it back. Number 2, it can increase financial ratios. And number 3, the company can basically use cash to do a buyback if it thinks it has sufficient cash. On the first 2, I think Dangote is okay. On the last one, I don't think Dangote has sufficient, in quotes, liquidity. If it did have liquidity, it should use a liquidity to buy back or to pay down its debt, maybe before it doesn't buy it back. But that's just my opinion. What do I know? What's the 4th reason why companies do share buybacks? Now, look at it this way. If the tax treatment of shares when you do a buyback is looked at as if you are doing a dividend. So if you're doing a dividend, remember the company's profits have already been taxed and you're paying a dividend out of those taxed profits. So that's like a double tax. So the way tax authorities in the US look at a share buyback is it's already been taxed. So the tax treatment for share buybacks is less than what you'd get if you were getting a normal, say, capital gains or normal company taxation on the profits of the company. So in this instance, it could be that if you get a share buyback, that might be a tax way or a tax loophole to get funds to the shareholders without them having them to pay a tax or having them to pay as much tax as they would have paid if they got on normal dividends, i.e. dividend withholding tax, all that kind of stuff. Because you're doing a share buyback, the tax treatment might be different. I know the US example, not too sure of the Nigerian example, how that would work out, i.e. in terms of excess taxation, but it's something to keep our eye on. Overall, Dangote is the first to do this, and he has set a precedence if it does go through on the 30th. Trust me, you will see lots of Nigerian companies now come to the market to buy back shares. What that does is for investors to say, hey, this can be a sudden boost in my holdings, because if you have a stock that is going nowhere, no dividends have been paid, bonds have been paid, and so the stock is going nowhere. When a company then comes and does a buyback, that changes the complexion or the structure of the shareholding, and that can affect the company's returns going forward. So it might be a juicer, in quotes, to Nigerian stock market and to investors, and it's definitely something to keep an eye on. So kudos, Dangote. Thank you for showing us the way. We hope this works out well, and we hope that the investors get paid. Let's stop here, guys. Thanks for listening. Again, keep sharing the Way I See It podcast to your friends. Thanks for all the downloads. We have a lot of downloads. I appreciate you guys for doing that. Also follow us on Twitter, Fin Plan Kalu Aja1. I love you guys. Take care. Bye.